Hello and welcome. I'm Srinivasan and this is Talking Sense with Srini. India's economy looks good on paper, but scratch the surface, stagnant wages, frozen private investment, a rupee at an all-time low. And now the US-Iran conflict is sending crude prices spiraling. For a country that imports 85% of its oil, that's not a global headline, it's a kitchen table crisis. Prime Minister Modi chaired a cabinet meeting today where he emphasized on ease of living and ease of doing business. But is the government even looking at the right problem? Joining us to decode this is our editor-in-chief, Srinivasan. Prime Minister Modi has asked citizens to cut back on gold, foreign travel, fuel and all that. So he has halved his own cavalcade of cars. And he just held a 4-hour cabinet meeting where he emphasized on ease of doing business and ease of living, and most importantly there. All these sort of signal that there is an impending threat. And is India already undergoing a sort of crisis sort of scenario here?
Yeah, certainly. There is a huge crisis, economic crisis, which India is facing currently. And we are in the midst of it. And whatever Prime Minister is saying is clearly indicating towards that. He's asking people to follow more austere measures.
That's right.
He wants them to save. He wants them to tighten belt. Things like, don't buy gold, travel, in a carpool, conserve energy. I mean, these are all many things which he's been saying it. But the question is really, are these the real problems? And are we trying to bark up the wrong tree?
Yeah.
That's what it is. That it's not, these are not this, immediate solutions for whatever the problem. Yeah, the one way to put it is, are they, when there is a surgery required, are we just trying to put some band-aids? And I think it's a political messaging which Prime Minister is trying to do, that he is telling preparing the people, like he did during Corona, that he is trying to say, there is a crisis coming, you guys be beware. And, in popular messaging, these are tightening your belt, all those kind of things. Perhaps works for him to send a message. But from an economy point of view, are these the real issues? Then, as you correctly said, that there are structural issues. And these issues have been there for a while now. It's not as if because of the Gulf War, it has come. What the Gulf War has done right now, basically the war between US and Iran, is exacerbated these tendencies which are already existing in the economy. I think the real issue is to address those problems and see what is to be done.
What should be done? Because we believe that, when Finance Minister came out with this, cutting down the income taxes and all that, we thought that's a reform. The GST 2.0 was seen as a huge reform. Prime Minister himself called it a reforms engine of sorts. What kind of more reforms do the economy need?
Yeah, so basically there are a number of issues which need to be addressed, and they've been staring at the government for a while now. Mm-hmm. Now, for over 2-3 years, the government has been trying to rekindle investment.
That's right.
Basically the domestic investment. And then for that, what they did, they tried various measures, because it is important that domestic consumption goes up, because only when the consumption, so investment goes up. For domestic investment, that will go up. For that, you need consumption also to go up.
That's right, yeah.
If the domestic investment goes up, which means people, the industries are investing more. They are, extending capacities. But then they don't want to extend capacities because they are already running full,
somewhere in the mid-70s.
Yeah, mid-70s. They are not even full capacity, so they don't want to invest. So they are very reluctant. Now, she tried various methods. She wanted to, give them a signal that, okay, I will invest more in public infrastructure. So there was a lot of investment made in public infrastructure, hoping that
which is the government capex.
Basically, government capex, hoping that the companies will follow with their own capex. Because when public infrastructure is first, set aside, then follows the private investment. Nothing came. In fact, the companies are all sitting on huge reserves. Since the COVID, they have collected, if you look at the balance sheet, they have actually a lot of cash on them. According to one estimate, nearly 11% of the assets of the family-owned companies, large Indian family-owned companies, they are sitting on those reserves and they're not spending that money. Basically, the real problem is that money is there lying with them, but they're not willing to take any risk. The business community perhaps begin to believe that they don't need to do business to grow. Rather, they could invest it somewhere. So why, if you can make more money sitting and investing, why to get down to the shop floor, set up new factory, set up new establishment, hire people, buy capex, do all that hard work when you can make more money just by investing? I think that seems to be the strategy. And this is really foxing the economist, both in government and outside for the last several years. And the finance minister has tried various measures. In the last budget, she even tried to cut the tax so that people could spend more. Something happened, there was a little blip, and then after that, things came back to normal. So the real crisis there is private investment is not picking up whatever they are trying, and that's a huge structural problem they have to face. The other thing what is happening is there are a number of other shocks which economy faced, and the one starting 2016, the demonetization. Then came the GST. Now GST was beneficial in many ways, but then the states are still, many states are still protesting about the kind of money they need to receive from the center, compensation payout. And then there was some adjustment made in that also. Then came now the corona. There was another big shock. After that now we are seeing Ukraine war, and somehow it was thought that we'll overcome that. Now there is another, another war, US-Iran, which has caused huge energy crisis because India is importing nearly 85% of its fuel from these countries, and with Gulf, the Hormuz, crisis. So it's become very difficult to get tankers from there. So it is also spilling over to LPG crisis and also, fertilizer crisis, which we'll face when the agriculture season is coming. So there are a whole lot of problems. But this government, probably Prime Minister, by making the statement that, look, there is something happening, Gulf War is happening, tightening of belt, seem to suggest that this is all because of this external factor. Economists are saying, and they begin to talk more and more vocally, that look, that's the problem. Everybody agrees. But structural problems exist even before that. It precedes this particular conflict. Mm-hmm. And therefore, the government must do something, use this opportunity, use a crisis to convert that into an opportunity like the way we did in 1991. And that's the issue right now.
So what's the difference between 1991 and how is it now?
Yeah, so 1991, what happened was that India faced a huge economic crisis because it ran out of its foreign exchange reserves. And it had only 2 weeks of reserves to finance its imports. So the government was in a great difficulty because so it had to take a structural adjustment loan, and also it had to go to IMF and had to pledge gold to raise forex. So it was really a very difficult situation. Inflation was running double digit. So to overcome all of that, then Prime Minister P.V. Narasimha Rao brought in a whole lot of reforms. And that time his finance minister was Manmohan Singh. And what they did was they brought a complete sea change in trade laws. They changed the industrial policy resolution. They brought in they changed completely abolished monopoly restrictive trade Trade Practices Act, liberalized a foreign exchange regime, and the liberalization over the period of time continued. So they brought a whole lock, stock and barrel, whole lot of reforms which was unthinkable. And these reforms quickly happened within a month or two. They were rolled out. Those days I used to cover finance ministry, and almost every day we would rush to get a new press note and a new announcement. And, that was a time when the crisis was really very big. If you compare with that, there is no such crisis right now.
And we've got great
forex reserves are really pretty
9 to
good.
11 months.
Yeah. Our current account deficit really, it's more, that time it ran very high. The manageable limit is about 2%. We are not even there. We are much lower. So the current account deficit is under control. Your fiscal deficit is under control. Your forex reserves are good. Also the overall political climate in India right now is pretty good. That time there was an instability, a lot of instability because the fallout of political situation, what happened in Ayodhya all out, it had a spillover effect. But there is no such situation right now. And also, there's been a steady growth in economy year after year, 6%. So all those things have happened. So politically, the Prime Minister Narendra Modi is perhaps most powerful right now. After a bit of a shock he got in 2024 parliamentary elections, he could regain it by winning various state assemblies. As state after state, he's been winning, the last being West Bengal. And therefore, BJP is almost now, one can say, if you look at entire map of North India, West and even East, they have all, they rule almost all those states except some states in the South. And then there is a very poor opposition. Congress is in a bad shape. So, despite all this, everything going in their favor, economy is not standing up. That's the biggest trouble.
What kind of course corrections should the Modi government be focusing on right now?
Well, I'm not an economist to give prescriptions, but I can certainly say that there have been a number of suggestions which are coming from economists, and they have been saying it for a while now. There were fewer voices, but now there are more and more people are joining. So the thing which they are pointing out is look at the foreign direct investment. In fact, Surjit Balla, who used to be, he is one of those who talks straight.
Part of the Prime Minister's Economic Advisory Council.
Advisory Council, and he also been, a very, this thing of the government. He's also begun to say that, look, the problem is that you have to have FDI. And his particular prescription is on that one particular decision he thinks which has gone wrong, which is BIT, Bilateral Investment Treaty. Now, this treaty was, he says basically this treaty is problematic and that is causing foreign investors to be wary of India. And what is that? Basically, this agreement suggests that if there is an Indian partner to a foreign investor and something goes wrong between them, then they cannot separate for next 5 years. It has to go. They have to have a cooling period of 5 years. I think that has been subsequently reduced to 3 years. And they have to go for an arbitration only after that, and that too before an Indian judge. And he says this is very problematic. This won't be acceptable to any company. So he says in a different language, he says, look, if there is a divorce between two partners, it has to be settled quickly. There can't be a cooling period of 5 years. And nowhere in the world something like this happens. And he says that this is one of the biggest deterrent which is holding back foreign direct investment. There are other things which has happened in the past, which is basically a retrospective imposition of tax, which happened in the case of, if you remember, it happened in the case of Vodafone case. Mm-hmm. And then those things were changed, but things still sits in the statute books. That's what he feels. So he says that these things need to be cleaned up, and then Government of India should do a very strong commitment. There are a number of other issues which economists are pointing out, that there have been a lot of hype built over a whole lot of issues, which everybody has been cheering politically, which is basically slogans like we have to become
Viksit Bharat.
A Viksit Bharat. So Viksit Bharat means we have to become a developed nation. It's good to have an ambition that we want to become a developed nation in 10 years, 20 years, 1 decade, 2 decades. But what seems to have happened is this whole slogan, Viksit Bharat, maybe is also giving a sense of complacency that have we already become a developed nation. And
people have fallen in love with the slogan, not with the efforts that
exactly
needs to be.
And that one, that we are a Viksit Bharat. And the other one, that we are a very fast-growing economy. And those kind of things are really begin to have its adverse effect. So at least Balla says that, if I had to quote him, he says that, look, politically this government has done very well, but from a economy point of view, they haven't. And there are other critics, there are other economists who have been pointing out that there are a number of structural problems. If you look at the stock market, again, the one problem was it was overvalued. So therefore the valuations are very, very high. The other thing is even FI inflows, if you look at that. There are other markets. So very little FI inflows.
They have more of outflows, yeah, that's right.
If you look at FDI, if you look at January data, 5.67 billion came in 4.92 billion was repatriated, which means it went out. And simultaneously, another 2 billion were invested by Indian companies overseas. So what is happening is net negative FDI. Rather than people investing in India, they are investing outside. Where
That's right. No, it also
in
because there seems to be a lot of, what you talk about higher valuations, stretch valuations or the froth in the market. But apparently what a lot of other people who are tracking the market say, India is certainly not in those certain sectors where it's lucrative. For example, artificial intelligence. We don't really have much of developments happening. While there was a lot of noise earlier.
So if you have to say, if you look India Inc. and if you have to say what kind of India Inc. it is, I think many people abroad, these FIs and all begin to look at as it's an old stock.
Absolutely, yeah.
That it's it doesn't have what it requires. So that kind of buzz is not happening about India, and
that's right.
That's another problem. Therefore, the money is going out because other markets are more lucrative and people are investing.
And it's not going to United States, it's going to South Korea. That's important.
Yeah, so some of these countries are actually doing pretty good. So the comparison, if you have to do with other countries, neighboring countries, and some of them are doing pretty well. Even if you look at per capita income growth in dollar terms, Bangladesh is more than ours.
That's right.
Ethiopia is number 2. So, so there are a whole lot of changes which has happened. And so these are old beliefs, and then this constant thing that we are very, we are great, we are different, whatever we do, foreigners have to come to invest, all those things have gone. So probably our government has to make a lot of effort to bring investment back into India, whether it is FDI or it is FI. FDI investment is always considered better because it's long-lasting.
Absolutely.
It's an investment, and it leads to more productivity. It gives
asset
you
creation.
better technology. It results in asset creation, employment. All those things are there. So basically, that's these engines are spluttering, and therefore economy is facing. And domestically, like I said, that local companies and their owners are not investing. So it's a double whammy.
All right, sir. Thank you very much. Very insightful talking to you.
Thank you.